Welcome to Stock Talk with Nico Kritikos. Today we're going to be going through why I am bearish on Rivian stock, not necessarily the company, but definitely the stock price. So we're going to go through Nico's stock market checklist. But before we do that, I want to show you, just if you don't know, what these cars look like and what the website looks like. So Rivian is a high-end electric vehicle automaker that specializes in trucks. Okay. And their prices start at around $67,000, so they're not cheap. And we're just going to do some comparison between them and Tesla's, them and the competition, and just what the industry is looking like right now. So Rivian they were partnered with Ford, okay, but Ford backed out of the partnership over a year ago. However, they still have a deal with Amazon for, I think, over 100,000 vehicles, which is still a great sign for them. But if we look deeper into their fundamentals, we can see that. So first of all, there's the stock price has been sold off a lot. It IPO'd a couple of months ago at $100 a share. It spiked to 172, and now we're down to 61. I still believe the share price can go all the way down to about $30, if not $25 or $20. That's how overvalued I think this company still is. I do not believe the market cap should be $54 billion. I think it should be more like 20 or 25 billion. So if we get back to this, we can see the company has not had revenue or net income increases. Okay. So for this year, they're expected to only do, over 2021, they're expected to do 57 million in revenue. That's it. This is a company that's worth over $50 billion. For 2022, they're expected to have a huge jump with 3.5 billion in revenue. Now that's a good sign. That's a big jump right there. They're still not even close to reporting anything in profitability. And so, but if you look at the last couple of years, you can see that net income has gotten really, they've been losing tons of money, and they really haven't sold many cars yet. So they're at very introductory stages. And if we look at their valuations, of course, they don't have, the price to sales is like, I think it's a 4,000 or something crazy like that. They don't have a price to earnings. And then I put, for innovative or a moat, I put no, because the Amazon deal is somewhat of a moat for them. And I mean, I guess we can give this one a yes, because they are innovative in the electric truck, I guess you could say, even though Tesla's kind of doing the same thing. But the Amazon deal definitely sets them apart. That gives them a big, competitive advantage. But look what happened to the Ford deal. They had a deal with Ford. We could have said that was a big advantage, and look what happened. Ford backed out. So I mean, is that a bad sign? Is there a good reason why Ford backed out, or is it just because Ford wanted to do it on their own? So we don't know what's going on there. I mean, so the underlying issue here is really about what's priced into this stock right now for a $50 billion company. A lot of it is based off of just what might happen in the future, and if everything goes according to plan. So. And I invested in Tesla in 2018, right when they were at this early stage like this, when they were ramping up vehicles. They weren't too popular, and everyone thought it was just, like a dream at some point in the future. Well, from 2018 to 2020, Tesla went through a bunch of different problems, dealing with cash flow problems and profitability, with factories burning down, with tons of backlash from the investors and the media and tons of different people. So it's not an easy thing to ramp up an EV company and make a profit and do everything that people are expecting them to pull off. So this is not just, just because they're making these high-end electric trucks does not mean it's going to be as successful as a Tesla. Of course, return on invested capital is negative. All these are no's because they're all negative. They don't have good margins or cash flow. They don't have diverse revenue streams. They're just making their trucks. Balance sheet is really bad. Tons of debt, not much assets. The equity is way under 5% of the market cap. It's negative. And then equity has not been increasing. So their balance sheet has been getting worse, more and more debt. They have not been buying back shares. They issued more, and big money and insiders are interested. We know Amazon is interested. There's also been several insiders buying the company. Now, where this gets really interesting is when we compare this with Tesla. So in the last month, we have seen some insiders buy, but where this gets interesting is when we compare this with Tesla. So first thing we're going to do is look at the specs and how Tesla's Cybertruck compares with the Rivian trucks. I love the way the Rivian trucks look. I think there's a good chance they do become a big player in that space 3 years or 5 years from now, but doesn't mean it. Right now, the valuation is way too high. But the Rivian trucks look great. But if we compare them to the Cybertruck, we can see that. So the 0 to 60 is faster on some, right? On this model, the Rivian is faster. Then, but the fastest model, the Cybertruck, still wins. I mean, that's not the biggest deal. You're not really racing with trucks or anything. Top speed, 125. You know, that's not a huge deal. Range is extremely important. As you can see here, on the low end models, Tesla has a slight advantage. And on the high end models, Tesla has a huge advantage. So nothing too fancy there. I've heard, let's see the battery, not much info on Tesla's battery yet, but the other thing, so Tesla has 6 seats. The charging kilowatt number is higher for Tesla. Max towing, we have Tesla still beating them on the highest end model. And then same thing with carrying, you know, things like the towing, that is something that people will look for. And if Tesla already has the edge on that too, then I'm not really seeing what edge Rivian has over the Cybertruck. Bed length, Tesla hasn't beat on that. And look at the cheapest you can get the Rivian for is $70,000 when the Cybertruck is going to cost 40, almost half of what the Rivian costs. So not much advantage there. Now let's say for some reason, I don't know, let's say even if Tesla makes a better truck that's more affordable, has better specs, Rivian can still be in second place, right? They could still make some money being in second place. Maybe they develop something to give them longer battery range or more efficient battery, whatever it is. Then maybe that helps them, you know, gets them in second place and they steal some market share. Maybe their deal with Amazon is a moat for them that sticks around for the next 5 years and that helps them out, right? Let's assume all that happens. If we go back to 2018, 2019, right around the time that Tesla had a similar valuation. So in 2018, 2019, it was hovering right around this $50 to $60 billion mark. In the middle of 2019, it actually came down even more to 30 billion. And then it went back up to 40 billion in late 2019. Now, during that time, 2018 to 2019, Tesla was doing anywhere from 3.5 billion to 6.5 billion. So the average right there is probably, they did as high as $7.2 billion of revenue in a quarter in the middle of that time while they were valued at a similar valuation to Rivian. So let's say on average, they did about what, $5-6 billion of revenue per quarter, right? And that was when they were valued at this right around the same market cap. Okay. Well, today Rivian has that market right around that market cap of $53 billion, but they look at their revenue and earnings. They've had $0 of revenue, zero. So, I mean, that just kind of puts things into perspective of how overvalued this company is and how much of the pricing how much of the valuation that's priced in is just betting on what the company will likely do in the future. So those are all the reasons why I am bearish on Rivian stock, not necessarily the company or their cars, not saying they don't have a chance, but just that they have long ways to go if they want to get close to proving that this valuation makes sense. I think the stock needs to drop at least another 50% before it gets at a more fair valuation. So just keep that in mind and make sure you know what you're paying for out there when you pay for these high growth companies.